Good morning. Today is Wednesday, November the 9th, and it is the day after the midterm election. Results are still streaming in. As of the latest news, the result seems to be very keenly fought, with only one seat separating between the incumbent and the Republican Party. Currently, based on the latest data, it does appear that the Democratic Party is having the upper hand by one seat. Okay, the full result may not be known until perhaps tonight, and so just keep an eye out on the result of this midterm election and the reaction from the various parties and their supporters. Overnight, we can see that the Wall Street actually recovered, and with the Dow Jones actually taking the lead, charging a new high for the month at 33,355.4, and this is by far the highest price ever traded since what we have seen in August 26. So this is a major reversal of fortune. Remember, at the end of September, the Dow Jones was at the year low. Then it broke the September high, then it broke the October high, and at the very beginning, on the first day of November, it broke the October high before coming down under the pressure for the FOMC rate hike. So now the market is back up again. Okay, so obviously, the money is currently in the Dow Jones, especially on US blue chips, as foreign capital continue to flock into the United States. So this is the only fundamental which I can relate to that sees overseas inflow of capital into the United States capital market and into US equities per se, and mostly into the US blue chips. That's the reason why Dow Jones has been more elevated than the other major equity index. So based on what you have seen so far, there's a very likelihood the market in the Dow may actually challenge the August high at 24,281.36. Okay, so if the market does take out this level, which is still iffy, there's no guarantee that it will. Okay, but if it does, then my midterm target will be at 34,842.9. Okay. Now, over in the S&P 500, we also see there was a market rebound yesterday, but it did not quite go up as high as as the Dow Jones. So basically, we can see from this chart here, this is the daily time frame, and while the market has actually gone up, it has not yet taken up the November 1st high point of 3,911.79. Okay, that means to say that it is very far away from the September high of 4,119.28. So based on what we have seen in Dow Jones is already way above, now challenging the August 26 high. And now we are very far away from August high, which is at 4,325.28. So we don't even want to talk about the August high. We can't, if the market can continue to go higher, at least it got to break last week's high, okay, 3,911.79, before attempting to challenge the 4,119.28, which is the September high. Okay. Over in the Nasdaq 100, we find that this is the weakest link. Although the market did rebound, but the rebound was actually quite half-hearted. The highest it been to was 11,191.9, which is a very far cry from where the S&P 500 and the Dow Jones were trading. Okay, so obviously we have not taken out the October high, because the October high is 11,681.85, and we are only midway up to that point from the low point here. So based on the reaction itself, technically I think the market may be in a situation whereby it is quite vulnerable, because it has not been able to rally in any significant ways. The downside risk obviously is the largest in the Nasdaq 100. If the market actually turned down from 11,191.9, I won't be surprised, because the market right now is within a bracket of prices which I feel could be vulnerable, which is 11,101.96 to 11,212.77. So the downside risk for the Nasdaq is a lot higher compared to, let's say, the S&P 500, and definitely more than the Dow Jones. Okay. Over in Hong Kong, we can see that this market itself this morning was actually trading sideways very much. Yesterday, the market was actually having an inside day after achieving a high for the month itself at 16,821.89 on Monday. Yesterday was an inside day bar. Market was seeking direction, basically was consolidating. As of this morning, we can see the Hang Seng is still seeking direction. Not sure where it is likely to go. Yes, it has marginally taken out yesterday's high, but it was only marginal, so it's not indicative of where the market likely is going to go. So based on what we have seen on the on Wall Street, there's a likelihood if the Dow Jones continues to charge higher. Maybe at the very most, it will challenge the October high as 18,164.2. But I think this is all that it can do. This market is basically long-term bearish. Although, remember yesterday I did mention that on the weekly time frame, we do see a very bullish setup here, which is the outside bar at the end of last week's trading. This is the outside bar. And if this is the overriding sentiment, then maybe the October high will be challenged seriously this round. Okay, so let's watch whether how far ahead it can go based on that weekly reversal that we have seen on the weekly time frame. Over in the Shanghai Composite Index, we also have the same thing that we saw in the Hang Seng, which is on the weekly time frame. We have also a outside bar. This is a bullish engulfing bar. Technically, it should be very, very bullish. Now the market is still trading a little bit cautiously. There was a bit of a follow through on Monday at 3,088.19, but not much. Yesterday, the market did not take up any higher, did not challenge the Monday's high. The current sentiment is that the October high may be capping this market at 3,099.92. Okay, but I think this level will be taken out because it's the closest. The more substantial resistance, I think, will come from the September high at 3,278.16. I think this level will be more resilient to any upward pressure. Over in the currency market, we can see that the dollar continues to correct, although not very evident in the dollar versus the yen. But again, we can see that this morning we have a marginal low at 145.20 in the dollar yen. At the current rate that it is retracing, there's every possibility the market will challenge the October low at 143.53. But my take is that it will likely go lower to 142. Now, if you look back on September 22nd, during the first BOJ intervention, the market traded a low of 140.43. So it is also a possibility the market may even go and attempt to test this low, but I think it will hold. Basically, from 142 onwards to 140, I think this bracket of prices does give us the a good range to actually consider re-establishing a long position if that's the intention. Okay. Over in the sterling itself, we saw a rebound yesterday. I was already short this sterling yesterday afternoon, thinking that it will come back down first before it goes up. My original thinking is the market may actually come lower, okay, lower to maybe to test the October low of 109.23 before it attempts another rally to 120.60. But apparently it did not. Either my timing was off or I'm wrong, okay. But still, I'm holding on to my short position, hoping that this will do a three-wave pullback, okay, and possibly test the October low before it rallies again. So let's see what happens. Over in the euro dollars, we can see that the rebound in the currencies and technically also inversely, the technical pullback in the dollar is a little bit more obvious. This time in euro dollar, the market actually took out a marginal high above the October high, which is 100.94. Market yesterday high was 100.96. So we have a marginal high, and now the market is attempting to go up again. So we will see this afternoon how the market reacts. Okay. But by and large, I think if the market doesn't come off from here, my immediate target is at 102.86. From this level of prices, I think the odds of another pullback will be higher, okay, rather than from the current level of 1009. In the Aussie, we also have something very similar. With market have a marginal high for relative to October high. October high was 0.6547. Yesterday high was 0.6551. So again, it's a marginal high, about 4 pips higher than the October high, and the market appears to be wanting to go higher. And if so, then my immediate target for this midterm outlook will be 0.6715. Within this bracket of prices of 0.6715 to 0.6750, I think this is a very vulnerable area of contest. Maybe the market will pick out somewhere around there and then it comes back down. Okay. In the energy market yesterday, we have remember yesterday I did share with you that my 1 month long position has squared off, because yesterday at the end of Monday's trading, the market ended up first hitting my target, very, very close to my target. My target was $93.79. It came up to $93.74, missing just by 0.05 cents, and then end up as a reversal pattern like this. Okay, so I took the I decided to close out all my long position, and lucky I did, because the market went down to $88.50. 52 cents. Okay, yes, the market does appear that it wants to correct further, but I'm looking for a chance to actually reestablish my long position, because I do believe the medium-term outlook is still for another rally. And this time, if the market can take out $96, I think it will go for 98 to even $100 per barrel. So I think this is my medium-term target. So the whole idea is that I want to reestablish. Hopefully, the market can hold out around here. Okay, which is $85.30. So maybe at $86, I will see if I get any reason on the lower time frame to reestablish back my long position. Okay. Over in the precious metal market, we have a big run yesterday, and this is the second big run since Monday. Monday, we have a run up in prices. Okay, and we can see, sorry, this is last Friday. Last Friday, we have a major run up from $1,615.50, and it paused for one day yesterday. It continued to edge higher to $1,716, almost 90 cents. So this is again approaching two very key levels, and these two levels are hard to overcome for gold. It must overcome these two levels, which is $1,729.46 to $1,735.10. So if the market take out the upper limit, the 1,735.10 cents, that set the stage for a challenge of $1,800. Okay, that will be huge, because by then it means that the consolidation phase of this market could be temporarily over. Okay. And there is every possibility, if market continue to take out even the August high, we are set for a resumption of the long-term rise in gold. Okay, but the market in precious metal market seems to be centered more on the silver market. We can see that silver yesterday has a massive run up. Okay, and the high traded was $21.63. So we can see that the market now is already challenging the June high of $22.51 down. This is huge. The market take out this level and eventually take out the May high of $23.29. Then we are set for a full resumption of the bull run in precious metal market led by silver. Remember, I was telling you guys that the speculators, after failing to buy enough precious metals in the spot market in London, has already shifted the focus to the COMEX precious metal market futures, and there is a major short squeeze, which I suspect even before yesterday's move, because after last Friday major run up, I saw that the sentiment may have changed a little bit. And when I look at the data, it looks like there's a lot of activity in the option market in COMEX, centered on the December delivery. So it does give rise to the possibility that speculators may be holding orders long position all the way to expiration and then demand delivery. And that will cause a problem, because the warehouse stocks in COMEX are pretty low, especially for silver. So right now we are seeing is a short squeeze possibly developing, and this is positive for prices going forward. Okay. Over in the crypto space, the big news yesterday, of course, was the FTX, a major exchange, decided they want, because news that came in over the weekend about some kind of a problem in terms of their reserve, okay, their backstop being released somehow into the market, caused the market to come off, and there was talks that there's a lot of withdrawal going on in FTX. Personally, I also have an account with FTX, and after the Monday, I decided that I want to pull back all my capital, and lucky I did, because yesterday on Tuesday the market actually went down big time. Okay, so for FTX, the token coin is FTT, okay, which is the token issued by FTX, has been majorly sold off to the point where by now they are in talks with Binance to take over. So Binance now is in talk with FTX, and currently doing their due diligence to see if it is worth their time and efforts to take over FTX, which is another major exchange. Some even categorize FTX as the JP Morgan of the crypto world. So can you imagine Binance taking over FTX? But the market reaction has not been good. Ever since this news came in yesterday, most crypto have actually went down rather than up. Okay, so instead of being calming the market now is in a panic mode, because it is giving us that same vibes all over again. Remember Luna coin? Okay, this is something very similar to that, and the sentiment is so poor right now. Yesterday the Bitcoin itself broke 20,000, which held very well or since June this year. Okay, so it broke for the first time, and now it's currently at the year's low at 16,864 for the Bitcoin, and at the rate it is falling, it could well be heading towards the 12,000 point, okay, the $12,000. My long-term target will be 8,760, but anywhere between the bracket of $2,070 to $11,885, that is a bracket of vulnerability. I think the market may actually find some kind of support within this very broad range of prices here. Target is at 8,760 for now, okay. So this is actually quite a very bearish outlook. Over in Ethereum, it also the bearishness in the market actually spilled over to Ethereum as well. Market broke a very nice rally yesterday and broke the support, went up to as low as $12,000. Although it is not the lowest of at the year's low yet, okay, but we can see that the sentiment is also pretty poor in Ethereum here, okay. Ethereum low this year was at $878, so we will have to see whether it does go down to that area of prices or not. My immediate target is $538 there about, okay. Binance coin seems to be doing okay because at the end of the day, when Binance take over FTX, there's a lot of demand for this coin, for the Binance coin itself. So initially the reaction was positive. Market rallied to almost $400, okay, but per coin before coming back down and take out the $300 level. Last traded was $319, about $20 there about, and it is so far still positive. But if it breaks this near-term support line, we could be seeing a revisiting of the year's low. So we will have to watch how this thing pans out. For Ripple itself, the market is still positive. Yes, market pulled back quite sharply to 33 cents, but thereabout, the market is overall looking okay for me, okay. This is a lower to buy market for now, okay. Dogecoin, of course, does came off quite a big time from near 16 cents. Now is trading near to 0.75 cents. So the low point traded was 0.0769, okay, which is so far the low that we have seen over the last month itself, okay. The one that was taken to the cleaners is actually Solana. Solana actually sold off big time because Solana is the preferred blockchain technology favored for NFT, sorry. And since we know NFT has not been doing fairly well this year, and of course the negative news of FTX possibly going under has also negatively impacted Solana, and this is where we are right now. At a year low of $18.81 at the end of yesterday's low, we have $18.81. The target immediately was is for the extended fall into $13.63 to $4. So we still have a bit of room left before it goes into zero. So we have to watch this coin very closely because it's keep on falling. At some point, it will have to stop falling or it will go out of oblivion, okay. So for the time being, let's watch out for the new for the latest development in the FTX saga, as well as the midterm election result, which should be due by tonight. Okay guys, this is all I have for you today, and I shall see you tomorrow. Bye bye.